Thank you, Hannah. Thank you for joining us today. We're going to be talking about SSDI benefits. And I want you to know that today's is SSDI, tomorrow is SSI. So if you're able to join us for tomorrow's presentation, that would be great. These trainings will be recorded and they will live with OPWDD and also within our agency, NYESS at OMH. So you do have access to them in the future if you need additional information. The trainings are being made possible by the National Expansion of Employment Opportunities Network, which is called NEON. It's a NEON grant funded by the by the Office of Disability Employment Policy, or ODEP, through the Department of Labor, and in collaboration with the Office of People with Developmental Disabilities, OPWDD. I want to introduce you to Michael Dalto, who is the subject matter expert today on SSDI benefits. So please turn your attention to Michael and his presentation. Thank you.
Thank you very much, Lisa. So one of my favorite websites is called Old Jews Telling Jokes, and the name describes the website perfectly. To appear on it, you have to be at least 60 years old and Jewish, and it just features hundreds of videos of people telling jokes. And my favorite one goes like this. A man calls his mother and announces, "Mom, I'm finally going to get married." His mother is overjoyed and she asks, "So when do I get to meet her?" And the man says, "Listen, Mom, you're so perceptive. I want to play a little game with you. I want to come over to your house tomorrow with three women. I won't tell you anything about them. And you just chat with them and guess which one I'm going to marry." And his mother agrees. The next day, the man shows up with the three women. They sit on his mother's couch. He doesn't tell her a word about them, and she starts grilling them. And after 2 minutes, she stops abruptly and points and says, "The redhead in the middle." And the man says, "Mom, that's unbelievable. I mean, I knew you were intuitive, but just talk to them for 2 minutes. How can you possibly know that that's the woman I'm going to marry?" And his mother says, "Because I don't like her." And I think of that joke often when I think about the reception that many people who get disability benefits from Social Security greet the idea of employment with. Although people getting benefits from Social Security have more reason to be skeptical than that mother did about her future daughter-in-law. For one thing, people often have to fight long and hard to get disability benefits from Social Security in the first place. If you're denied on the first try and have to appeal, it can take upwards of 2 years to get approved for benefits. Once people get approved, they often have had to endure a lot of hardship while waiting. The benefits are usually retroactive, but what are you supposed to do? What are you supposed to live on if you have to wait a year or two to get approved for the benefits? Once people get them, they begin to think of them as their livelihood, as their safety net, as guaranteed security. It's a benefit that arrives in a person's bank account, generally the same day each month. It's not much money, but people get accustomed to living on the amount that they receive, and they're reluctant to do anything to risk it. And everybody's heard horror stories about the impact of work on disability benefits from Social Security. So our goal today and tomorrow is to learn basics about Social Security disability insurance, SSDI benefits. As Lisa said, and tomorrow we'll talk about supplemental security income, or SSI benefits. Those are the two kinds of primary cash benefits that people get from Social Security based on having a disability. But more importantly, we're going to talk about the work rules, how work affects these benefits, and how people can use safety nets known as work incentives that help protect benefits when a person goes to work. to make sure that they can keep the essential benefits they need and that they'll be better off financially working or increasing their earnings than not. And we're ready for the next slide, please. So I want this training to be interactive. So it's going to be guided by a bunch of questions. Most of them are true, false. And if you can just go ahead and type an answer into the chat, that's great. Doesn't matter if your answer is right or wrong. The idea here is just to keep you engaged and participating. I will tell you before we start that you're not supposed to know all of the answers, all the correct answers to these questions. If you do, it means you're probably about as big a benefits nerd as I am, and then you should be worried. So we'll start with first question. Social Security Disability Insurance, SSDI, is a cash benefit for people who have severe disabilities and have paid enough Social Security taxes on their earnings from work. Is that true or false? And you can type an answer into the chat. Just true or false, or T or F, whichever you prefer. Thank you, Andrea. Constance, Michaela. Thank you, Constance. And Michaela? Okay. Okay. Very good. And we're ready for the next slide. The correct answer is true. So the amount of earnings a person must have received depends on their age when they apply for SSDI and whether or not they're blind. Younger people need less earnings to qualify, and blind people need less recent earnings. The amount of the SSDI benefit starts with the individual's average lifetime earnings adjusted for inflation. And then that's plugged into a formula that indicates what their SSDI benefit amount should be. So the higher the person's average lifetime earnings, the higher their SSDI benefit will be. Next slide. So I am going to skip over this part rather quickly. I did have a request in a previous presentation of this training to go into some detail about how much a person needed to have paid into the system by working and paying Social Security taxes on their earnings. What I will do is simply say that a person needs somewhere between 6 work credits and 40 work credits, depending on their age. If they're under age 24, they only need 6 credits to qualify. To earn a credit, a person needs to, in 2025, needs to earn at least $1,810 in before tax earnings, like gross wages. So if a person earned $1,810 in 2025, they'd get exactly 1 credit. They can get up to 4 credits in a year. And to earn 4 credits in 2025, they'd need to earn 4 times the $1,810 amount, or $7,240. And we'll move on to the next slide. A person who is not blind needs to have done some recent work. A person who's blind does not need to have worked recently. And next slide. So we'll assume then that a person has become eligible or entitled to SSDI. Our next question is, when a person becomes entitled to SSDI, they qualify for Medicare starting the same month. Is that true or false? Okay. And Michaela? All right. Everyone agreed on this one? And the correct answer is, next slide, please, is false. A person on SSDI does qualify for Medicare, but there's a 2-year waiting period. They have to be entitled to SSDI for 24 months before their Medicare will start. Next slide. So to summarize then, SSDI is a cash benefit from Social Security that a person can get if they have a severe disability and they've worked and paid Social Security taxes long enough to have what's known as insured status. And after they've been entitled to SSDI for 2 years, they get Medicare. Next slide. So there are 2 other ways a person can get SSDI besides working themselves and paying Social Security taxes on their own earnings. The most common of the other 2 ways is to get SSDI based on a parent's work rather than on the work done by the individual with the disability. To get SSDI on a parent's record, the person with a disability does have to have a severe disability. They have to be an adult, at least 18 years old. Their disability must have started before age 22. And the parent must be either receiving a Social Security retirement benefit or the parent is getting SSDI on the parent's own work record or the parent is deceased. If all those conditions are met, then the person can get SSDI on their parent's work record. And that's fairly common. I would imagine each of you probably works with a number of people who get SSDI on a parent's work record. Next slide, please. It's also possible to get SSDI on the work record of a deceased spouse. But this is fairly rare because there just aren't that many people who meet all the criteria. To get SSDI on a deceased spouse's record, also have to have a severe disability, have to be at least 50 years old, have become eligible for the benefit before age 60, and the deceased spouse or deceased ex-spouse must have worked and paid Social Security taxes on their earnings long enough. So that one is rare. You'll probably rarely, if ever, encounter it. Next slide, please. So what is the disability standard to get SSDI? Question 3, to qualify for SSDI, a person's disability must have lasted or be expected to last at least a year or be a terminal illness and must prevent the person from doing substantial work, which Social Security calls substantial gainful activity, or SGA for short. Is that true or false? Okay, thank you, Andrea. Thank you, Constance and Michaela. Okay, and we're ready for the next slide. That one is actually true. So a person has to have a severe disability that's lasted or is expected to last at least a year, and it has to limit their ability to work. Notice I did not say it has to prevent them from working at all. That is a myth, and an unfortunately persistent myth. A lot of people think that if they're capable of working at all, they're not eligible for SSDI, and so they will be inclined to refuse to work, thinking that they won't be eligible or that they will lose SSDI. And it's not true. A person can be capable of working, but the disability has to somewhat limit their ability to work. Next slide. So that's basic eligibility for SSDI. Now let's get into the work rules. Question 4. The rules about how work affects SSDI are more generous for blind people than for people with any other disability. Is that true or false? Thank you, Andrea, Michaela, and Constance. We've got agreement on this one. Next slide. It is true. It is true. And you might wonder, well, what is it about blindness that should make the rules more advantageous for blind people? Blind people have the best lobby. Decades ago, when these rules were being created, blind people were very effective at getting special advantages carved out for themselves. Next slide. So if a person is determined to be legally blind by any government agency, then Social Security considers them to be blind as well. Is that true or false? Thank you, Andrea. Thank you, Michaela. And thank you, Constance. All right, we're ready for the next slide. This one is false. One problem with our system of public benefits is that they don't agree with one another. They don't even necessarily agree on who is blind. But Social Security has a very specific definition of blindness. They don't call it blind. They don't call it legally blind because those are not long enough. They call it statutorily blind because one rule for Social Security bureaucrats is never use one syllable if 9 would do just as well. So their definition of statutory blindness is that the person's vision in their better eye with glasses is no better than 20/200, or their field of vision is 20 degrees or less. If they meet that definition, then they get advantages. Next slide, please. All right, moving on. The SSDI trial work period, question 6. When a person who gets SSDI first starts paid work, they get a 6-month trial work period when they can earn as much as they want from work and still keep their full SSDI benefit. True or false? Okay. All right. Thank you for your answers. And next slide, please. This one is false. It's actually partially true. There is a trial work period. A person can earn as much as they want during that trial work period, but it's not only 6 months, it's 9 months. A person generally gets only one trial work period in a lifetime, but for 9 months at least, they can earn as much as they want and still keep their full benefit. Okay, next slide. So question 7, after the trial work period ends, if a person's work is considered substantial gainful activity, or SGA, their SSDI will stop permanently. True or false? Right. And next slide. This one is false, and it's fortunate that it's false because this provides a greater incentive for people to work and earn as much as they can. So if a person's work is substantial gainful activity, or SGA, after their trial work period, their SSDI will stop. But if their earnings later fall below SGA, or they stop working for any reason, they can get SSDI back without having to reapply and start all over, which is great news for people who are able to work at a level that would be considered SGA. And we will be talking about what that means in a little bit. So working your way off SSDI is not necessarily permanent. You can get SSDI back without reapplying if you stop doing SGA later. Next slide. So in the SSDI program, there are 3 phases of safety nets called work incentives. The first one, as we've reviewed, is the trial work period, and that's generally the first 9 months a person works after qualifying for SSDI, when they can earn any amount, no matter how high, and still keep their full SSDI payment. After their 9th and final trial work period month, they start something called the extended period of eligibility. Remember that rule for Social Security bureaucrats? They do call the extended period of eligibility EPE for short. And that's 36 consecutive months, starting right after the trial work period ends. During that 3-year period, if a person is doing SGA, their SSDI will stop. But if they stop doing SGA within that 3-year period, they can get the SSDI back just by notifying Social Security. They don't have to reapply. After the 3-year period is over, after the EPE, they enter a 3rd phase called post-EPE. During the post-EPE, if the person's work is SGA, then their SSDI is terminated. It doesn't just pause like it does during the EPE. It actually is terminated. But even then, if the person's earnings drop below SGA within 5 years after their SSDI was terminated, they can get SSDI back a quicker and easier way than reapplying. It's not as easy as just contacting Social Security the way they could during the extended period of eligibility. It does involve substantial paperwork, but it is quicker and easier than reapplying. And that way is called expedited reinstatement. So there are layers of safety nets of work incentives in the SSDI program. It is important to note that SSDI is an all or nothing benefit. If the person remains disabled and they're not doing SGA, they'll keep the full amount. If they do SGA after their trial work period, their SSDI benefit will stop. Not necessarily permanently, but it will stop. It will go down to 0. And that makes it frightening for many people on SSDI to consider working at a level that would be SGA. Next slide. So let's talk more about SGA. Question 8. A person who is not blind may be doing SGA if their pre-tax earnings are $1,620 a month or more in 2025. A person who's blind may be doing SGA if their before-tax earnings are $2,700 a month or more in 2025. So is that true or false? All right, we've got agreement on this one. Next slide. And the correct answer is true. These are the SGA dollar amounts in 2025. They usually go up every January a little bit. For example, in 2024, the SGA amount for a person who's not blind was $1,550 a month. This year, it's $1,620 a month. Okay, so you'll notice that one advantage that blind people have is they have a higher SGA dollar amount. It's more than $1,000 a month higher than non-blind people. Non-blind people have an SGA amount of $1,620 a month. Blind people have an SGA amount of $2,700 a month. So they can earn more. Blind people can earn more without doing SGA. Next slide. Question 9. After finishing the trial work period, any person on SSDI who is not blind will have their SSDI stop if they earn $1,620 a month or more in 2025. Any person who is blind will have their SSDI stop if they earn $2,700 a month or more in 2025. Is that true or false? Okay, we've got agreement on this one and we're ready for the next slide. But happily, the answer is false. If the answer were true, then everybody on SSDI would be limiting their earnings and keeping them under $1,620 a month or under $2,700 a month if they're blind, unless they were brave and willing to work their way off SSDI. Now, if a person's before tax earnings are higher than the SGA dollar amount, then they may be doing SGA, but not necessarily. When figuring out if a person is doing SGA, Social Security is supposed to look only at the portion of the person's earnings that reflects their actual productivity. So there are some subtractions from earnings that Social Security applies to adjust their earnings so that the remaining amount after the subtractions is a more accurate reflection of the person's productivity. And if the amount remaining after the subtractions is below the SGA dollar amount, then Social Security will determine that the person is not doing SGA and they can keep their SSDI, even though their gross wages are above the SGA dollar amount. Next slide, please. Question 10. If a person is an employee, when Social Security decides if their wages are SGA, they'll subtract amounts the person paid for disability-related expenses they needed for work. There's also a subtraction if the person was paid the full wage for the job, but their productivity was lower due to their disability. Is that true or false? Okay. So everyone agrees that is true. Let's check. Next slide, please. It is true. So the subtractions are called, number one, impairment-related work expenses. So these are expenses that the worker with a disability pays for out of their own pocket, and they're not reimbursed for. The expenses have to be related to their disability or another medical condition they have, and the expenses have to be needed at least partly for work. And the second subtraction is called a subsidy. And that occurs when the individual is paid the regular wage for their job, but because of their disability, their productivity is somewhat less than a typical non-disabled worker in the same job. Maybe they're working a bit more slowly, or there's certain tasks that they can't perform or can't fully perform because of their disability, or maybe they're getting extra help to do the job, or maybe some combination of those things. So the logic of this is, well, yes, I may have earned an amount that was over the SGA dollar amount, but I had to pay for these extra expenses to earn that money due to my disability that a non-disabled worker in the same job would not have to pay for. So in a way, I didn't really earn as much because I had to spend a chunk of my wages on these expenses due to my disability. The subsidy is even more obvious. If you were paid 100% of the wage, but your productivity was less than 100%, then the amount that you were paid does not accurately reflect your productivity because you weren't working at 100% productivity. Okay, next slide, please. If a person is self-employed, when Social Security decides if their earnings are SGA, they'll subtract business expenses the person paid for, excuse me, impairment-related work expenses, business expenses that another party paid for, and the value of any unpaid help the person got with their business. Is that true or false? Okay. All right, let's check. Next slide, please. So this one is true. So the subtractions, there are 4 of them, would be business expenses that the worker pays for to operate their business and that the IRS allows them to deduct on their tax return. Secondly, the impairment-related work expenses, which employees can also use, as well as self-employed people. The third one sounds a little unbelievable. A person can deduct not only the business expenses they paid for, but the business expenses that were provided to them that they didn't pay for, such as if maybe a family member paid for them, or Access VR, the state vocational rehabilitation agency, paid for the person or provided at no cost to the individual. They get to deduct those as well. And the idea there is, well, if the person didn't have a disability, they would need to pay for those business expenses themselves. They would then be deducted from their income as business expenses they paid for. The fact that they got these business expenses at no cost to them was only because they had a disability. And number 4, the value of unpaid help. So if a family member or a friend is giving help to the person to run their business and they're not charging them, then the individual can deduct the market value of that free help they got. So figure out the number of hours of free help they received and multiply that by what would be a reasonable hourly wage for that type of help if the person had to pay for it. And that will be a deduction as well. And again, the logic there is, well, if you were in business and you didn't have a disability, you probably would not be receiving unpaid help. You'd be paying for any help you got. Next slide. So let's look at some examples of those impairment-related work expenses. And again, those are expenses the worker with a disability pays for out of pocket. They're not reimbursed for. They're needed due to their disability or another medical condition, and needed at least partly for work. And examples would be medical things, medications, medical services, as well as equipment and supplies, therapeutic services, transportation, excuse me, transportation that's needed because of a disability, like paratransit, the service that'll take a person door to door, but only if they have a disability, Uber or Lyft if a person can't drive themselves, paid rides from a friend, vehicle modifications. If a person does have a vehicle that they can drive or have someone else drive them in, but it needs to be modified with maybe hand controls or a wheelchair lift, the cost of those modifications can be allowed. And if a person has a modified vehicle, then any work-related mileage is also allowed as an impairment-related work expense. And impairment-related work expenses are known as IRWEs or IRWEs for short. Next slide. Also assistive technology, job coaching, if a person paid for it. Most people don't pay for it. Sometimes, occasionally a person will. Attendance services needed to prepare for work, home modifications needed for work. If maybe a person needs to have a ramp installed at their home so they can get in and out of the house to go to work. Service animal expenses, prosthetic devices. If a person is in a residential program and they have to pay a portion of the staff costs, staff who are assisting them, and if the staff are helping them prepare for work, then a portion of the payments that they pay for so-called cost of care to help pay for the staff costs can be an impairment-related work expense as well. Next slide. All right, I'm going to pause for a moment just to see if anyone has any questions so far before we go through a couple of examples. I'm going to go through one example of a person who is not blind and one of a person who is blind. One person is an employee earning wages. The other person is self-employed and getting business income. And we'll be looking at these examples to see how those subtractions from earnings work and how they can help a person keep their earnings below SGA and keep their SSDI. All right, so do we have any questions or comments so far?
Can I ask one live or should I type it in?
Sure, please go right ahead. I can barely hear you though, Andrea. If you could speak a little louder.
Is this better?
That's much better. Thank you.
Sure. Some field offices give pushback regarding whether or not Uber receipts would be considered an IRWI. So is the general rule of thumb whether or not the person can drive themselves? That way you could relate it to the disability.
Great question, Andrea. And I can see you've been around the block with these rules before. Um, so in order for transportation to be considered an IRWI, an impairment-related work expense, first off, it can't just be standard public transportation. That's considered sort of the baseline. So a transportation IRWI needs to be something over and above standard public transportation with, the big buses or the subway. So if a person claims that transportation is an IRWI, they do have to show that it's needed because of their disability. So if, let's say, they're using Uber or Lyft or paying a neighbor to drive them to and from work if the only reason they're doing that is that they don't own a car, but they are capable of driving and have a driver's license, then Social Security will usually deny that transportation as an IRWI because the person hasn't shown the need for it related to their disability. On the other hand, if the person needs to pay Uber, Lyft, a neighbor to drive them, and they could not drive even if they had a vehicle. For example, they have an intellectual disability that prevents them from getting a driver's license. They have blindness or a vision impairment that prevents them from passing the driver's test. They have a seizure disorder and their seizures are not adequately controlled for them to be able to drive legally. Then, even if they had a vehicle, they wouldn't be able to drive it, and their need for Uber, Lyft, rides from a neighbor would be justified in terms of their disability. Did that answer your question, Andrea?
That was perfect. Thank you so much.
Sure, you're welcome. All right. All right, and Constance has no questions. Okay, well, let's move ahead then. So we're going to go through an example now with Alicia, who gets SSDI. She is not blind. She used up her trial work period last year. So if she starts doing SGA, her SSDI will stop. I should mention, I haven't put it in here because it sometimes confuses people, but there is actually a 3-month grace period. The first time a person does SGA after their trial work period, that month and the 2 consecutive months that follow it are a 3-month grace period, and they can still keep their SSDI for those 3 months, even though they're doing SGA. But to simplify things, what I'm saying here is that if you do SGA after your trial work period, your SSDI will stop. Again, not necessarily permanently, but it will at least pause. So Alicia gets a new job, earning $17 an hour, working 28 hours a week. This gives her average gross wages of $2,063 a month. And I calculated that by taking her hourly wage times her hours per week times 4.333 weeks per month. Because if you do the math, you'll see that there are 4 1/3 weeks in an average month. Okay. But Alicia is unable to drive due to her disability. So she pays a neighbor $250 a month to drive her to and from work. She's paid the full wage for her job, but her employer estimates her productivity is about 90% of the average worker because she works a little more slowly and gets a little extra help. Okay. Now, before we go further with Alicia's example, I am going to ask Hannah if you could please pull up the cheat sheet. So this PowerPoint has lots of slides. It would be cumbersome for you to have to sort through the PowerPoint every time you wanted to look up one of these rules. As a result, one of the documents that you received is this SSDI and SSI cheat sheet that summarizes the rules in just a few pages. So it describes for SSDI what it is, how much a person can get, actually tells you, which I didn't mention in the PowerPoint, that the average SSDI benefit this year is $1,580 a month, and the maximum is $4,019 a month. but many people get much less than the average. It's usually paid on the third day of the month, although some people get it a different day, like maybe the third Wednesday of the month. And Medicare comes along with it. Under SSDI and work, it's a reminder that SSDI is all or nothing. If you're eligible for the payment because you're not doing SGA, after your trial work period, you'll get the full amount. If earnings are above SGA, however, after the trial work period, then the SSDI will stop, though not necessarily permanently. To figure out if a person's earnings are SGA, you first look at how much they're earning. Are their gross wages above or below the SGA dollar amount? And the SGA dollar amount for a person who's not blind is $1,620 a month. For a person who is blind or statutorily blind, it's $2,700 a month. So if person's earnings, their gross wages are over the SGA dollar amount, then you've got certain subtractions you can use. The impairment-related work expenses, or IRWEs, and subsidy if the person is an employee earning wages. And if they're self-employed, they can deduct the business expenses they paid for, the IRWEs, the unincurred business expenses. Those are business expenses that someone else provided to them at no cost to them, and the market value of any unpaid help they get with their business. And if a person is doing SGA in spite of the subtractions, their earnings are over SGA even after the subtractions, then there are safety nets. Haven't really gotten to the next one yet. We'll go ahead and minimize the cheat sheet and come back to Alicia. But I want to encourage you to go ahead and download that cheat sheet from the email that Hannah forwarded to you. Open that up so you'll have it available when we go through these exercises. It's a helpful reminder about the rules. All right, so what we see here is that Alicia's average gross wages of $2,063 a month are well over the SGA dollar amount for Alicia, who is not blind and has an SGA dollar amount of $1,620 a month. But we'll look at whether she can use subtractions from that. Next slide, please. So first question, what is Alicia's SGA dollar amount, being a non-blind person? And your cheat sheet shows you that if you don't remember it. What's the SGA dollar amount for a person who is not blind? If you could please type that into the chat, that would be great. Okay, thank you, Andrea. Okay, Constance and Michaela. Thank you, Michaela. All right. Next question, which work incentive can Alicia use for the rides she pays for? What's that work incentive called? And you can use the acronym. You don't have to type the whole thing out. Thank you, Andrea. Michaela, Constance. Thank you, Michaela. And I'm assuming that Constance may be having computer issues. All right. And then finally, which work incentive can Alicia use for the lower productivity? Remember what that one's called, and that is on your cheat sheet. Thank you, Andrea. And thank you, Michaela. Subsidy is correct. Very good. Next slide, please. Right. And let's move on to the next slide. So how do you figure out the value of a subsidy? There's actually a form that the employer completes to document a subsidy. They answer a series of questions about whether the worker is working more slowly, is getting more frequent breaks, is getting extra help, is not able to fully perform all of the duties, etc. And it asks the employer to estimate a level of productivity for the worker. And the way that you calculate the value of a subsidy is perfectly logical. In Alicia's situation, she's paid 100% of the wage for the job, but her employer estimates her productivity is 90%. So she's really only earning 90% of what she's paid if her productivity is only 90%. And so the 10% of her wage that she's not technically earning would be the subsidy. That would be subtracted from her earnings. So Social Security would count only the 90% of her wages when figuring out if she's doing SGA. And 90% of her 2,063 a month wages is 1,857 a month. Now that's still over SGA. Remember, SGA for her is $1,620 a month. But the transportation, because she needs it due to her disability, she's unable to drive due to her disability. So she needs to pay someone else to drive her. That's allowed as an impairment-related work expense, an IRWE, and it's $250 a month. And we subtract that from the 1,857 that remained, and the difference is 1,607 a month. That's called her countable earnings, the amount that's left over after the subtractions. So with countable earnings of 1,607 a month, would Alicia be doing SGA? Do you think? Yes or no? And just a reminder that the SGA dollar amount is $1,620 a month, and her countable earnings are 1,607. Excellent. Thank you very much. That's correct. She would not be doing SGA because her countable earnings, the amount that remains after the subtractions, is below the SGA dollar amount. So would she keep her SSDI? Thank you, Michaela. Thank you, Andrea. Absolutely right. Next slide, please. Great. Okay, so what we've learned here so far is that although Alicia's earnings are well over $1,620 a month, she is still not doing SGA thanks to the IRWE and the subsidy she has. And she can still keep her SSDI and keep the full amount. Next slide, please. Now we're going to move on to Jay, who is blind and self-employed. So he's got a different set of subtractions from earnings that he can use. So Jay gets SSDI, he's blind. He used up his trial work period a couple of years ago. He's self-employed. His business brings in an average of $8,000 a month in gross earnings. He pays an average of $4,000 a month for business expenses. He pays $300 a month for Uber to get to and from work. He's unable to drive due to his blindness, of course. The IRS does not allow him to deduct his commute as a business expense. So that was not included in the $4,000 a month business expenses that he pays for, but he is paying for it. And it is needed for work and needed due to his disability. Next slide, please. So Access VR, the state vocational rehabilitation agency, provides him with an average of $900 a month of free items for his business, including management services and inventory. So these are things that would be allowed as business expenses on his taxes if Jay paid for them, but he's not paying for them. Access VR is. His wife, Beyonce, helps him with business tasks. She works an average of 10 hours a month. Jay doesn't pay her, but if he did, the wage for her work would be about $20 an hour. So her help is valued at $200 a month, although Jay is not paying for that help. Okay, next slide, please. So first question about Jay, what is his SGA dollar amount? Remember, he is blind, and your cheat sheet will tell you the SGA dollar amount for a blind person. Okay, Andrea and Michaela, you're right on top of this. Absolutely, it's $2,700 a month. So next question, how much is his net business income after business expenses that he pays for are subtracted? So just a reminder, the gross revenue, the gross income from his business was $8,000 a month, and the business expenses he pays for are $4,000 a month. So what's left over after deductions? Thank you both very much. $4,000. Now that's still well over $2,700 a month, the SGA dollar amount. But let's move on to which work incentive can he use for the Uber rides he pays for? Okay, thank you, Michaela. Okay. Andrea, you're showing off now. There's a work incentive called blind work expenses, BWEs for short, that we're going to be discussing tomorrow. Unfortunately, BWEs only can be used in the SSI program. But a blind person getting SSDI can use IRWEs, impairment-related work expenses. Okay, so yes, Jay can use the Uber rides as an impairment-related work expense, an IRWE. Next question, which work incentive can Jay use for the business expenses that, I'm sorry, I modify this training for each different state I do it in. That should say Access VR, business expenses that Access VR provides at no cost to Jay. OVR is what they call it in Kentucky. So which work incentive can he use for the business expenses that Access VR provides at no cost to Jay? And that's on your cheat sheet. See if you can find that one. Okay, so remember that there are different work incentive subtractions for self-employed people than for employed people. And Michaela, you got unincurred business expenses, and that's correct. Yep. All right. And finally, which work incentive can Jay use for the help his wife provides? And that's also on the cheat sheet under the deductions for self-employment income. And Michaela's saying value of unpaid help with the business, and that is correct. Very good. It's unpaid help. Next slide, please. Okay. So we're ready to move on to the next slide. So how much are Jay's countable earnings? So let's go back to a couple of previous slides, please, Hannah. Let's pause there. So we already figured out that his net earnings from his business after the business expenses he paid for were $4,000, but the SGA dollar amount is $2,700. He can use the Uber rides as an IRWI, and he can use unincurred business expenses for the business expenses that Access VR provides to him at no cost to him, and the unpaid help for the help his wife provides. So if we could go back one slide, please, Hannah, and go back one more slide. And one more. Okay. So we had $4,000 of net business income after subtracting the business expenses that Jay paid for. Then we can subtract his IRWI of $300. That leaves $3,700. Next slide, please. Then we can subtract the unincurred business expenses of $900, what Access VR provides to him, and that leaves $2,800. And finally, we can subtract the value of the unpaid help that his wife provides, which is $200 a month, and that leaves a balance of $2,600 a month. Very good. Thank you, Michaela and Andrea. And we're ready to move on to next slide, and next slide, and next slide. And there it is, last slide. So is he doing SGA? If his countable income is $2,600 a month? Thank you, Michaela. He is not doing SGA because his countable earnings are below the $2,700 a month SGA amount for a blind person. Very good. So he'll keep his SSDI. So it's not real complicated. All you have to do is look at how high a person's earnings are before the deductions. If their earnings are over the SGA dollar amount, then look at all the subtractions that they're allowed to use. And the subtractions they can use depends on whether they're employed or self-employed. And if they've got enough subtractions to get their countable earnings, the remaining amount after subtractions, below their SGA dollar amount, then they're not doing SGA and they can keep SSDI. All right. Any questions about those two examples? I have one question for you. Did that make sense? Were you able to follow the logic there? Okay. Did that make sense, Michaela? Certainly seemed to make sense because you were nailing the answers. Okay. Great. All right. Thank you very much. All right. We're ready for the next slide. Question 12. A person whose SSDI stops because they do SGA, even after subtractions, but whose countable earnings later fall below SGA, must reapply to get SSDI back. Is that true or false? And this harkens back to earlier slides that we reviewed. And your cheat sheet will also give you information to answer this one. Andrea is saying true if it's been longer than 5 years. Okay. However, let's say that the person began to do SGA shortly after their trial work period, and then within 3 years, they stopped doing SGA. Would they have to reapply to get SSDI back then? Thinking you may be confused. Okay. Well, actually, Andrea, if you go back and you look at the 3 phases of work incentives, there was one called the extended period of eligibility, or EPE. That's 36 consecutive months after the trial work period. And if your earnings are high enough to stop your SSDI, if you're doing SGA during that 3-year period, but then your earnings drop below SGA, all you have to do is call Social Security to get the SSDI back. You don't even have to use expedited reinstatement. Okay. But if you do SGA after that 3-year period and your benefit is terminated, but then if your earnings drop below SGA within the next 5 years after the termination, you can get the benefits back without reapplying by using that expedited reinstatement rule. The key takeaway here, if you're just trying to learn the basics and not become a benefits counselor, is that you do have safety nets to get SSDI back without having to reapply if you work your way off it and then you stop doing SGA within a period of years after that. Okay, next slide. Okay, and move on to slide 45, please. All right, we haven't talked much about Medicare, except to say that a person had to be entitled to SSDI for 2 years before their Medicare would start. So question 13, a person who works their way off SSDI can use 2 Medicare work incentives. The first one lets them keep Medicare for at least 7 years and 9 months after their trial work period ends without having to pay extra for it. After that, the second work incentive lets them keep Medicare indefinitely, though they may need to pay extra for it. Do you guess that's true or false? Okay, thank you, Michaela and Andrea. All right, and we're ready for the next slide, please. So this one is actually true. One thing that'll tip you off is I don't usually give false answers that are that long and detailed. Um, so the key takeaway here is even if a person works their way off SSDI, even if they work their way off SSDI permanently, they continue to do SGA every month, they never get SSDI back, they can keep their Medicare indefinitely. And if they use that second Medicare work incentive to keep Medicare indefinitely, they may qualify for another work incentive that will let them keep Medicare without having to pay anything extra for it. So I'm not giving a lot of details about the Medicare work incentives. The key takeaway is a person can keep Medicare indefinitely, even if they work their way off SSDI, and even if they work their way off SSDI permanently. That's really helpful. There are a large number of people who would consider working their way off SSDI if they'd be better off financially, but who do not want to lose that Medicare. Right, next slide, please. So getting Medicaid, a different benefit. This is another rule for bureaucrats trying to confuse the public. Give very different benefits, very similar sounding names. So we've talked about Medicare. Now we're talking about Medicaid. They sound very much alike, but they're very different medical benefits. So question 14, a person who gets SSDI and works may be able to qualify for another kind of medical insurance called Medicaid through a program called Medicaid Buy-in for Working People with Disabilities, MBIWPD for short. Is that true or false? Okay, thank you, Michaela. Thank you, Andrea. Next slide, please. True is correct. So to be eligible for the Medicaid buy-in for working people with disabilities, person has to have a severe disability. They're getting SSDI, they have a severe disability. They have to be age 16 or older, have to be working for pay, but there's no minimum amount they have to earn. They just have to have legal earnings from work. They have to have net income below a limit, which is $3,200 a month for an individual and a bit over or over $3,200 a month for an individual and a bit over $4,400 a month for a married couple. But to figure out their net income, less than half of their earned income is included. So less than half of their wages or their business income would be counted against the income limit, although almost all of their SSDI would count against the income limit. They have to have resources, assets, things like bank accounts below a certain limit, but it's a very generous limit. In my experience with programs that have asset limits, this program has a very generous one. It's over $31,000 for an individual and over $42,000 for a married couple. And they may have to pay a monthly premium that operates on a sliding scale if their income is high enough. But currently, there's a moratorium on premiums. The state of New York is not charging premiums for people who enroll in the MBIWPD program. So people are able to use this program to get their Medicaid for free. Next slide, please. So what does Medicaid do? Medicaid covers some medical and disability related expenses that other insurance may not cover. True or false? Okay. That one is true. You nailed it. Next slide, please. So Medicaid can supplement Medicare or private insurance. So a person can have both Medicare or private insurance and Medicaid at the same time. And the Medicaid will supplement the other insurance. And Medicaid is especially helpful in covering some disability related services that other insurance will rarely, if ever, cover, like home and community-based services that people get through Medicaid waiver programs, or personal attendant services, or behavioral health rehabilitation services through community programs. So Medicaid can be really useful as a supplement to Medicare and or private insurance. Next slide, please. So we have talked about the possibility of a person working their way off SSDI. Question 16 is, any person who does SGA and has their SSDI stop will be worse off financially. True or false? Thank you, Andrea. What do you think, Michaela? Okay, false is correct. Next slide, please. So this is a really important point. Up until now, we've focused primarily on how a person can keep their earnings below SGA and keep their SSDI. But that's not to say that should always be the person's goal. If a person has the opportunity to work full time and their hourly wage is high enough, they'll have more money with just their wages, even after their SSDI stops, than they would if they kept their earnings below SGA and kept their SSDI. So a person can be better off financially working their way off SSDI. Next slide, please. So SSDI overpayments, question 17. The most common reason for overpayments, that means owing money back to Social Security for SSDI payments a person got that they shouldn't have. Most common reason for overpayments is that Social Security is evil and loves messing with people's heads. True or false? Well, you're saying false. I would give you at least partial credit if you said true, because it often seems that way. Next slide, please. The correct answer is actually false. The most common reason for overpayments is that the person did not report their earnings to Social Security. So if a person doesn't report their earnings to Social Security and they're doing SGA, they'll continue to get SSDI payments longer than they should. And that means they will owe back to Social Security the SSDI they continued to get after it should have stopped. So the lesson here is when a person who gets SSDI works, they should always report their earnings to Social Security. Next slide. So a person who gets SSDI and is working can get benefits planning, a service to help them navigate the Social Security work rules, but they must pay a fee. Is that true or false? Okay. That one is false. It's partially true. Next slide, please. They can get benefits planning, but they can get it for free. They do not have to pay a fee. If they have a case open with Access VR, they can get the benefits planning through Access VR. If they don't have a case open with Access VR, and they live anywhere in the state, actually anywhere in the country, they can call 866-968-7842 and ask to be connected with a WIPA project. WIPA stands for Work Incentives Planning and Assistance. These are projects that exist in every state. Every state has at least one of them. New York has multiple WIPA projects, and they're funded by Social Security to provide free benefits planning to anyone who gets SSDI, or for that matter, SSI. And the top priorities are people who are either already working or actively seeking work. They can get services most quickly. And benefits planners are really helpful to help explain these rules in detail to people, to help them understand how to report their earnings and when and how often, how to use the work incentives, the deductions that we were looking at, and the protections for Medicare, et cetera, if a person is working, and just to help them navigate the Social Security work rules. Next slide. All right, and that will wrap up the first part of today's training. We finished earlier than expected. The second part of our training is we will have what I like to call a live case study. A woman named Nancy has graciously volunteered for this. Nancy gets SSDI and she's already working. And when Nancy joins us, then I'm going to interview her. I'm going to ask her some questions to get information that we would need to figure out which work incentives Nancy might be able to use. And then I'm going to show you a comparison chart that shows what her income and work-related expenses are now in her current work situation, and what they would be in a few other work scenarios that she's considering. So you can see how these rules play out with a real live person. Now, we do have